Welcome to this week's look at the state of the New York City real estate market. And wow, happy August. This report is for the week of August 4th to the 10th. We are really just flying through August. Feels like summer is really moving very quickly by. We are definitely seeing some shifts in the market, in the luxury market, the Manhattan market, and the Brooklyn market. So let's get right to it. We'll get started right now with the luxury market. There were 22 contracts signed last week. Wow, that's a big jump. That is 13 more than the previous week, which was a pretty pokey week. The number one contract was Penthouse H at 140 Jane Street. It was asking $87.5 million. This is a duplex penthouse on the 8th and 9th floor. It has over 9,500 square feet. It includes 6 bedrooms, 7 bathrooms, and 2 powder rooms. It has a spectacular 70-foot wide living room with a double height ceiling, a glass curtain wall that opens onto a wraparound terrace overlooking the Hudson River. This apartment is a stunner. Downstairs, there's a living room, kitchen, laundry room, study with balcony, library, and 3 other bedrooms. Upstairs is the primary bedroom with a balcony, a large dressing room. There's also a second bedroom, a home office, and a gym with a sauna and a balcony. This unit is in a new 11-story building. It was designed by BKSK Architects and Leroy Street Studio. It started marketing off of floor plans last September, and 13 out of the 14 units have sold at an average asking price of $5,600 a square foot. The amenities include a doorman, a porte cochere, automated parking garage, lounge, fitness room, lap pool, and hot tub. This is quite a record-breaking deal and very exciting to see this happening in the luxury market. The number 2 contract was a townhouse at 10 East 67th Street. It was asking almost $45 million. It was reduced from $50 million when it was listed in February of 2024, and then cycled through 2 brokerage firms. The 7-story, 26-foot wide house has a little over 13,000 square feet. It includes 7 bedrooms, 13 bathrooms, and 7 fireplaces. It also has an elevator that goes to the roof. The house was renovated over 15 years ago, and it features a rooftop glass atrium with a powder room. The atrium opens onto north and south landscape terraces, and if you're curious, the seller paid $28.5 million in November of 2006. Wow. Nice recovery in the luxury market. Let's take a look at the stats for the luxury market. For last week, total weekly asking price sales volume, 283,638,000. Average asking price, 12,892,636. Median asking price, 5,850,000. Average discount from original ask to last asking price, 5%, and average days on the market, 649. Wow, that's it for luxury market for last week. We're going to switch now. We're going to shift over, take a look at what is going on in Manhattan and Brooklyn. Slightly different stories in each of those markets, and definitely different story than what is happening in the luxury market. Definitely seeing signs of seasonality in Manhattan. The supply down almost 18% for the week at 168. Contract signed 216. Nice little pop there, 18%. And off-market properties 185. That is down almost 26%. For the month, the supply in Manhattan, 922, is down a little over 23%. Contracts signed down almost 15%, 853. Off-market properties up a little over 6% at 819. The latest reading on the Market Pulse shows that we are up just about 0.5% from last month and the same for last year. We continue to be fairly neutral, slightly favoring the sellers. I think that is not entirely true, however, because it's really just a balance of supply and demand, and we've seen a pullback in the supply and a little uptick in the demand. So it's very changeable, let's call it that. The liquidity pace chart, 853 contracts signed in the last 30 days, down 11% from last month, down 1% from last year. Okay, let's go to Brooklyn now. Let's talk about what is going on there. As I said, slightly different than what's happening in Manhattan, but that's why I am reporting on this every week so that you can stay current in what is happening in the market. At the end, I'm going to wrap this up, share some additional market information with you, as well as strategies to help you be successful, whether you are a buyer or a seller. In Brooklyn, we saw a slight uptick in supply for the week. 174 properties came on the market. That's up almost 29%. Contract signed also rose a little over 14%, 119. And the off-market properties dropped about 17%. 91 properties came off the market for the week. The supply for the month is down a little over 8%, 707, down about 21%. At 477 contracts signed, and up just under 5% for the off-market properties at 356. The latest reading on the market pulse shows we are down almost 3% from last month and down a little over 1% from last year. This is a little bit less than neutral, kind of approaching more the buyer's market. Again, this is a balance between the supply and the demand, pretty changeable, so it could change next week. We don't know. That's what it is for now. The liquidity pace chart, 477 contracts signed in the last 30 days. That is down almost 19% from last month and down almost 11% from last year. That's it for the Brooklyn stats. Let's shift now. We're going to wrap this up. I'm going to share some additional information with you, some additional data points that will be helpful to you if you are a buyer or seller, and of course, some great strategies to help you be successful. As I've said, nice recovery in the luxury market. 22 contracts were signed. That's up 13 contracts from the previous week. 6 of those were in the trophy category, and one of them, the number one contract, was a record-breaking sale. So congratulations to everyone involved in that transaction. The condos, again, outperforming everything else. 12 condos, 2 co-ops, and 4 townhouses for last week. 14 were uptown, 8 were downtown. Luxury market, well, I'm going to share some additional charts with you at the end of this report. You'll see what I'm talking about. This is really a tale of two markets. There's the luxury market, and then there's everything else. So we're going to take a closer look at that at the end. But for right now, let's talk about the Manhattan and Brooklyn markets, kind of as an overview. You know, this week, both are on the kind of same seasonal page. It's August. Things have quieted down a bit. The supply continues its seasonal decline overall. Weekly, not so much in Brooklyn, but for sure in Manhattan. The demand, both the 30-day and the weekly, rose a little bit. So, possibly it is a reflection of this slight downtrend in the mortgage interest rates. Could be playing a role. We'll have to see. The supply in Manhattan overall, 6,223. Brooklyn, 3,383. Pending sales, 3,299 in Manhattan. In Brooklyn, 2,051. Off-market, 3,796. Brooklyn, 1,759. Average days on market in Manhattan, 68 and 49 for Brooklyn. 30-day liquidity pace for Manhattan, 853, and in Brooklyn, 477. So I mentioned the mortgage interest rates. And as you will see, both the 30-year conforming and 30-year jumbo have ticked down a little bit. That could be playing a part in this little uptick in contract activity that we're seeing. Forget the luxury market. That's largely a cash market, but I'm really talking about the Manhattan and Brooklyn markets. So, could be that this little pop in activity is largely due to the mortgage interest rates. And listen, don't quote me on this, but I am hearing some rumblings that the mortgage interest rates might come down sometime in the fall, towards the end of the year, maybe during these job numbers will likely have an impact on all of these Fed rates and mortgage interest rates. We'll have to see. Again, buyers, be cautioned, don't count on this, but it's nice to see those mortgage interest rates have ticked down a little bit, at least for the moment, so take advantage. The two charts I want to share with you, one for Manhattan, one for Brooklyn, are basically about listing success, meaning the percentage of units that were listed during a specific month that receive a deal within the first 30 days of being on the market. The data basically separates the luxury market from the non-luxury markets, meaning everything priced below $4 million in Manhattan. And while we're seeing that the success rate is somewhat similar across both the luxury and non-luxury sectors, however, the luxury market continues to perform above average as compared to the non-luxury, which is at or even below average. In Brooklyn, last fall and most of the spring, the market was above average kind of across the board, but things really pulled back in June and July, and now it kind of sits below average. Still, the average does reflect the elevated success of previous seasons, and the current level, when you look at it, really isn't that bad, especially when you compare it to Manhattan. What does this mean if you're a buyer or a seller? Sellers, if you are currently on the market, make sure that you are making those adjustments based on the feedback that you are getting. Look, if you're getting offers, it means that you are perfectly positioned for these market conditions in the eyes of the buyers. If you've been on the market and you are not getting offers, it means that you're a little out of alignment with market conditions. Buyers are not seeing the value in what is being offered. They perhaps think you are overpriced in your asking price. So be sure, if you want to get your deal done this summer, be sure you are making those adjustments based on the feedback you are getting. If you are planning to list this fall, use this time to prepare your property to come on the market. Buyers, what can I say? It's a good opportunity for you. If you can live with the mortgage interest rates and or you're paying cash, take advantage of this moment in time. Come fall, you will have more competition. Yes, you will also have some more inventory, but don't forget that inventory will be new to the market. So those sellers are likely to be far less negotiable, and you will also have more competition. So this is a moment in time for buyers. And if you find something that works for you, this is a great time to be making a move. Okay, that's it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I will be back with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.